Alright guys, I'm back with another video. Okay, so today price action was interesting to say the least, right? And I want to address it a little bit here, but before that let me set it up. Sorry, that was me. And pop the chat right there, just in case. Now I don't know how long I will be up here for. I apologize, like I used the same thumbnail here, but it's one of those things where I need to, if not, there you go. Alright, so welcome to the chat here. If you want to kind of chime in, howdy. Hi Michael, what's up? Let's go. So like I said, I don't know how long I'm gonna stay. Let's kill some time by recap the price action real quick on GME. Okay, I don't know why I have this up here. Oh man, I thought I had a, let's see, lines over here, lines over here. Okay, if you've been watching my channel before, you know what this line is, right? It's called an OBV right there, on balance volume. Now I know, if you look up the definition of on balance volume, it's just indicative of a volume that is being traded, and if the price come down, usually the ticker, I guess, like, to me that shows that there are a majority of shares out there that are not exchanging hands, right, fast enough. But the price for some reason dropped much faster than the shares, trading hands. I hope that makes sense. That's how I make sense of this particular indicator. If you know more, please, it would be amazing to kind of like understand it fully. I know I read the definition before, but I just couldn't grasp it that well, right? The only other reference that I could kind of draw from is the stock that I know more about, kind of in tandem with Gamestop, right? But I'll show that in a minute here. So the price action was very interesting. Of course, like, I did not expect it to go this low. I was drawing this line, and of course, like, I bought some over here, a little bit at a time here, and the morning of 2 right here, sorry, around here, sorry, this one, the one after earnings, right? So right here, this one, I bought some over here, and of course I had to sell some over here too. The reason being is that I didn't realize I have more bills to pay in April. April 1st I have to I have to pay some bills, so that's why I have to sell some of my shares begrudgingly, but man, you have to pay the bill first. I was overzealous because of the earnings, of course, just like anybody else. I just wanted to kind of buy as much as I can. I put too much in my Roth IRA. In hindsight, I should have waited a little bit, at least. But anyway, hey, I have to sell. I have to sell some of my share, kind of break even there on the amount that I was buying recently. So I was kind of sell at around here this afternoon, because I could have realized it a little bit sooner. But again, hey, I just have to sell enough so that I could pay my bill next coming, and of course I have to make sure that I have enough for my tax as well. So I have to pay somebody to do that. It costs a little more than if I could do it myself, but I just don't want to mess it up, right? So yeah, have some bill to pay. Very bumped. Might not be able to even add more. Of course, like I'm trying my best to save in other ways. Like eating 1 meal a day type thing. Who needs 3 meal when you could buy GameStop at this point? Nah, I'm extreme. I'm kind of like Moran's in that sense. But and also too, I have free food at work, so I'm not like starving or anything like that. So so usually I only pay for 1 meal for myself. So it just means I have to eat 1 meal less for now, temporarily. But that's my pain to bear. Okay, that's a day in the life of a GameStop shareholder over here. But hey, it's life. I'm begrudgingly having to sell this morning. So, all right. I lost my train of thought. Okay. So if you look at the price action, obviously we know what's going on with AMC and all that stuff, right? Yeah, the narrative is back. AMC is the same as GME, so therefore it dropped the same way. That's the narrative. It's a meme stock, basket of meme stock, whatever, right? Been in this play for a while. I know what the schmeal is. And so what's happening in AMC? Of course, Adam Aaron again selling more shares into the market for AMC. Okay, so let's go back, compare the OBV with GME versus AMC. Now the day-to-day, obviously, if you look at the 1 hour, it kind of matches a little bit, right? But again, on the grand scheme of things, how many shares is being traded back and forth right there, right? So a higher a daily time frame, meaning a daily candle, will show you a lot more complete picture on the stock itself, right? The volume is not enough to cause this price action to ensue, okay? Either there's a lot of traders out there who just trading in and out of the stock, buy, sell, buy, sell, buy, sell at every single minutes at a time. They're ping-ponging it to each other, right? And so, of course, the option chain also kind of tell the story as well. It's not just the share holder that are, the one who doing that price action there, right? So my point is that, the sell price drops steeper than the actual volume itself, right? So that's indicative of people are actually holding this stock. Nobody's actually selling except small amount, right? Small amount of people are doing that. The reason being, if you look at the price over here, right? Again, I'm just looking at this from a perspective of somebody who been in this for a while. Okay, boom, right? So price down here, and then the sell. Sorry. If you look at the slope right there, right? Versus the slope over here. So the volume's up, but the price. The volume is much higher than the price. The volume is steeper. Every time there's a volume come in, buy action, right? The sell volume is lower. I hope that makes sense to you. So when people are selling up here, okay, where is that? Can I do a red for selling volume versus this for buying volume? Hold on. Shoot. Sorry, you guys. This is like a well drawn out one. Okay, so when people are buying, boom, right? Volume went up, volume up. That's buying. This is a selling pressure. When there's a selling pressure, from here to here, there's no selling pressure. There's only buying pressure. So if there's actual selling pressure, this should have been a lot steeper right here, but you don't see it, right? So what gives? I don't know how that would work. This would be indicative of selling pressure right there. Okay, hold on, let me unless I read this wrong, in which case, yeah, terrible, right? So selling pressure. Right, so what is this? Is this indicative of a diversion that it's gonna bounce off of this? Who knows, right? I like to hear somebody explaining this to me. Right there, right? Does that mean the next volume come in, it will do this thing where it bounce here, and boom, right? And the price gonna kind of go up again. Yeah. So anytime there's volume being in this stock, there's no selling pressure for it to justify that, so to speak. Okay, let me go back. Sorry. I hope that makes sense to you. But one other ones, it's a lot easier to look into this at this level. Okay, so again, so let me draw the line right here. Volumes right there. So that's still $5.9 billion of 5.9 billion shares being traded so far of the history of the market, of this particular stock, which is Gamestop, right? So this is the recent price action, but if you look at that, and again, daily candle, right? So let's do the same thing for AMC, right? If you compare that to AMC, you know that people are selling. I did this before, right? Now this it's could be said that the selling pressure is still steep, but you could tell anytime you see that split right there, that's when the indicative of people are selling. True selling pressure right here. At the very least, it's from the time of the split to now, right? So you could see a clear decline, right there on the on balance volume, right? If people are actually selling, yeah. So you could tell, I could tell that the selling pressure comes from Adam Aaron, right? Offering shares to these people to sell, on the backs of retail investor here. Now, I'm not saying that all retail investors are selling out of this, but leadership is the one that provides those shares onto the market. On balance volume is up here up until that split. So the split was the one that did it. That kind of shake people out. And of course, like recently, they just offer another shares, and you could see people are actually selling as well. I'm sure there's some people still buying into the BS, right? That is happening. And that's why, like, you can't compare GameStop to AMC, because it's just, number one, two different company here. Number two, price action doesn't support your claim that GME shareholders are selling because the earnings report, because we miss, quote unquote. We didn't miss. Yes, the bar was too high, and yes, the revenue was down, but it's at the end of the world, right? We're still profitable, right? And then, of course, I would like to kind of address that a little bit too. Before I go any further, though, let me double check to see if I have anything else to say on this one. Yeah. we all know what Adam Aarons is doing. It's been shown that he was not for retail shareholder basis or anything like that. When he introduced Ape, it was to gut retail out from within. Go on Twitter saying, I'm holding along with you. If you're hurting, I'm hurting as well. That is BS. Of course, we know that he sold his share already, gifted to his son, and doing an estate planning and all that BS. All of that to manipulate you into holding this company. All in a while, obviously, the company needs money, and they won't be able to survive for long. Who knows how long it's going to survive for? I don't know. But to call for GME bankruptcy in 5 years, I don't think so. But hey, maybe I'm not smart, right? Maybe I'm just biased here. But do your own research. So the price action is pretty depressing, but again, I'm not here for the price. I'm here for the company itself. As far as the short interest, obviously, it's still the same, 22%. If you look at the shares that are being traded back and forth, of course, I've shown you guys this before. This is normal operation, okay? And to have, if you look at the volume, of course, like if you look at the percentage wise, it's decreasing, but the number of shares being shorted, it's increasing by the day. It used to be only 1 million to 2 million there, right? Some days are closer to 1 million than others, but within this couple of days, and we all know why, because this is earning times, they have to short more shares in order to tame GameStop down, right, in price. Because there's no price discovery there, right? So they kind of just set the price on wherever it is and arbitrary doing so in the dark pool, as usual. That's why you see all net buying positive, but then, you don't see the price action to go along with it. And this is why, again, it's very, very risky to do call option because of the implied volatility. I have to say that over and over again because people are not going to listen. Now, if you look at the option chain right here, okay, you could tell it from a mile away. Now, the max pain should have been at $14, right? But it seems like there were some put option that was in the money right there. So, I don't know. Perhaps somebody loaded up on the put option side right there. Perhaps it's from the previous gamma ram on the opposite end. To push GameStop down to $12, right? Again, somebody had the ability to purchase the share at those price and perhaps dumping it on the open market as soon as they receive those shares or receive the ability to sell the share at that price, right? As a put holder, right? Put contract holder has the right to obtain the share of GameStop at whatever strike price that they are in the money for. Remember, before earnings, we were at $15 a share. And this is why, again, the price action kind of dictate around the option chain right there. And again, like for every single shares that is being sold, it's being held by somebody, right? So let's say if you are selling put to someone, they have the ability to sell those shares to you at that price, right? When the price dropped to that point. I hope that makes sense. Like, I know it's a bit counterintuitive on the option chain there, but and then the other way, if you look at here, if GameStop were to stay at $15 a share, close to 10,000 contract would have been in the money, and that's wouldn't be a good thing for people who are shorting the stock, right? I know market maker doesn't really care too much about where it landed unless they have the ability to trade against you on the other end of it, right? And so as a market maker, there's a notoriously Citadel has two arms of those, right? Of course, they like you to believe that they don't communicate with each other. The proprietary, the Citadel security versus Citadel as a market maker, right? So yeah, that's not going to happen, that they don't communicate. But again, hey, as a market maker, you're supposed to remain neutral here. You're not supposed to be trading against your own customer, right? Or your own client, because you have the order books here. But yeah, so Max Payne should have been at 14, so that's why I speculate that, they want to buy the share at a lower price. So let me see. Okay. I hope I explained that well. If not, well, sorry. Okay, so if you look at today, share available to short, lots of share being available to short. Of course, only 1.8. It's almost like they are enticing people to borrow the share, right? Now, this is an annual rate. Nobody even want to short this because it's so low. There's low demand for shorting this thing. But yet, you see people keep borrowing it anyway. Even though, there's a small % chance that they might even make anything out of it. Yeah, it's remained to be seen. I don't know who borrow those, but they have to borrow at a 1% there. They must be confident that this company is going to go under, right? That's why there's concerted effort to go to the news and tell people that this is not a buy, this is a terrible company, this is the worst company in America. I wonder why, right? Because they have to drive the price down, or else they're not gonna survive. Right? It's almost like their survivability is depending on GME price to go down. They just downgraded to $5 a share. That's terrifyingly stupid. Why would you do that? But again, like, maybe this is why Ryan Cohen tweeted out years ago, a dumb stormtrooper type thing, right? Who knows? But hey, let's look at the number real quick. And of course, Moran shows those numbers already. But I like to kind of like look at it at a different angle to provide a little bit more explanation. Of course, I can't top Moran's, like, that's ridiculous. But I like to try. Alright, so yes, we're profitable, $6.7 million. Of course, people are like, oh, that's not much. Okay, well, at least they're not burning cash, right? Not to the tune of trillions of dollars over here. So calm down, okay? Now, I'm not saying they make a gazillions of dollars either. Calm down the other side as well. But hey, slowly building up the infrastructure, that matters. He has been doing the right thing for 3 years now. When I said he, I mean like people who are, in GameStop. Leadership, working individual who wants to work for GameStop and has been kind of like providing value into this company here, right? So I'm very appreciative of the employee and people who try to make this company turn around in this manner here. Oh my God. All right, so let's look at, of course, cash is still, close to $1.2 billion there. Not much burn there, still the same cash amount. Debt, of course, we have lowered that a little bit as far as liability goes, right? Now, when we say no debt, of course, like we're talking about like long-term capital type of intensive one where you over leverage your asset in order to get into a bond, right? Like senior notes, that's the one that we paid off years ago. As soon as Ryan Cohen got in, we paid those off already, even pay a make-whole premium in order to get rid of that debt, right? So again, those type of action, people don't really see him doing that, and they use that as a excuse to say, hey, we have a cash burn of $7 billion or something. No, $7 million, $700 million, sorry. So within that, of course, we were paying off debt, $300 million. So that shows us a cash burn, right? Whenever we're not burning cash, we're just paying off debt over here. And much the same way right here. So let's see. Now, so this used to be 0.5, now it's 0.45. That's good. They're slowly trying to do that account payable slowly, right? I bet you anything, the minute we make money, we're gonna pay into the account payable, so that this debt is going to be stellar, right? Might take us a couple years here, but I'm hopeful that we would be able to do that. Let's see, I don't know, not within a year though. I think a little bit more, 2.5 years. How about that? I'm very optimistic. Okay, so this year, of course, there is a negative cash flow, but that's a steep cash flow right there to have, but not like crippling, right? Because we have that cash to burn. But I'll look at it. I'm sure Moran's already did that already. But hey, we're turning positive. EBITDA positive. I don't really care about EBITDA that much because again, it accounts for too many things. But EBIT is the one that we want to be positive. When we're positive on that means, again, incremental improvement here. I'm not saying EBITDA is not good. I'm just saying that it still shows the right direction, that the company is moving the right direction, inching slowly, like again, a tectonic plates move really slow. Okay. So patience. Yeah, perhaps we're just too early. Into this company. Yeah, I mean, if you think that the share is gonna go down to a single digit, which I've heard people said that before, then wait for it. You don't have to get into it right now, right? For me, I just learned my lesson. Remember, I was in Bitcoin before. And I remember kind of like, I'll come back to it when it dropped down. And you just end up forget about it because life goes on and something's going to be distracting you. And then pretty soon, by the time you realize Gamestop again, it's too late for you already, right? I miss out on the gain. Like, if I had paid attention to Bitcoin, I would have followed it a lot more closely, right? And would have been able to buy Bitcoin at $3,000. I would have bought Bitcoin at $3,000, right? But instead, I have to wait until it was like 8,000, right? And even at 8,000, I was cold feet too. I didn't buy in then. I had to wait until it was like 18,000. Then I was like, oh shoot, I have to get in or whatever. So I accumulate that. And thank goodness it was like the bull cycle. I didn't have to wait too long to accumulate it. But I did accumulate pretty kind of like diligently. Sorry. So it shows the power of accumulation, patience, and timing. I would add that too. So if you have all three, of course, yes, you know. So all in all, the reason why I would make a habit to buy it now, for me, my own personal, strategy is that I don't want to miss out, right? For me. But that mentality, obviously, my portfolio is down, admittedly. But again, I'm in here for 30 years time span here, My long-term investment, it's there, locked in, right? I can't even cash in without a penalty. Cash out without a penalty. Those are the type of portfolio that I have, because I know that once I buy into it, I'm not going to touch it, right? For that account. And so I have another account where I could, kind of trade in and out too. But again, a small little account for options and then all that stuff. I only do that because, again, number one, I don't get bored with it. Number two, I could learn from it. That's a lot, And that's how I learn best, when I kind of experience it firsthand. Okay. So Marantz did point this out already, and of course, like those are the number we saw. Boom, boom. Now these numbers right here, I wanted to kind of address because it's pretty important, right? Because again, like people say, oh, revenue is down by 20%. Okay. But look at the profit, right? Let's look at the net, right? That's the best part right here. I mean, come on, you guys. Are you nitpicking? Okay, if you look at this trend and then you're projecting, oh, at this rate, GameStop's going to be done by 5 years. Okay, so let's project 5 years ahead. Okay, let me go here because, oh, that's cool. I haven't done this for a while. Oh man, where's my pen? One second, you guys. I'm looking for the pen. Oh, right here. Got it. Okay, so let's look at this real quick. Right there. Alright, so I'm seeing, let's do projection, right? Of course, I'm going to do only 1 year. So back in quarter 4 of 2023. Again, this is the reported last quarter, right? We did a revenue, okay? Hold on. So revenue of 22 point, I hope you could see this. 226, right? There we go. This is terrible. Bear with me. I know where I'm going with this. Okay, so. Okay. But the income is what? $48 million. Boom. Okay. So sale was $2 billion, but then revenue is there. This coming fourth quarter that we just got a number on, we come ahead, okay, in income of $63 $3 million, right? Bear with me, okay? I know you guys are falling asleep right now, so do not fall asleep on me. Alright, so this is the number that people like kind of ups and arms about. Oh, this one is decreasing. 19%, right? Now, let's go overzealous, right? Go overzealous, projecting that the next quarter, a year from now, okay? Let's do a year from now. Okay. Quarter 4 of 2025. Okay. Let's do another projection, but that we're going to do another decline of 20% from today. Okay, today's number, right? So that the revenue would be, if you do a 20% less. So instead of this, you get 20%. Okay, I'm gonna do 20% because I can. Okay. All right, so let's do 1.794. 80% of that would be declining of 20%. So if they come out to be 20% less next year, what is that? Oops, sorry. Let's color coordinate it better. All right, you would come out to be decreasing by that much, right? Okay, at that rate. That's what it is, right? All right, let's play that game. But what happened during that decrease? What is this? Is this an increase or decrease? It looks like they make more money by decrease in revenue. No? Can I project that too? If you could play this game, why can't I play this game? You can't predict what they're gonna make. Maybe they're gonna lose more. Well, you can't predict how much they're gonna lose either. How can you trend it down 20% over here when I can't trend it up whatever this is telling me? You see what I mean? So what is this? This is 30% increase. Let's do the math together if that's what you don't believe me. Okay? So let me pull this over here so you could see it. No, I don't think you could see that. But let's do the math, and maybe you could do the math too, right? Because if you don't believe me, do that math. If I subtract $63 million from 80.2, right? I'm going to get 14.9. If you divide that by the previous number, which is 48.2, then I would get 30.9 actually. So technically, it's 31%, closer to 31%. But let's just decrease it. You know, again, I'm being generous over here. Conservative, okay? I'm overzealous on the decline, you know, by rounding it up to 20. But I round down the income basis, right? So I'm being over generous here, like I said. Now, if you do that same thing to that trend, right? What is that? That's a 30% trend the other way. So what is 63.1, right? What is 30% more than that is? What is that? So let's do that math right there. So that's going to give me $82.23 million. So next year we are actually going to make this much per year on quarter 4 though. quarter four. I'm not just talking about quarter four here. Not per year, sorry. Quarter four, we're gonna come out to be $82 million, right? Again, this is a projection. This is also a projection. This is an imaginary number. This is also an imaginary number, right? And, this is why it's so important for people to become a little bit more vigilant on the prediction, right? And this is why Moran's got it wrong too. But again, hey, we were over optimistic about the growth of the company, right? And I'm sure the analysts on the other side are also over enthusiastic about the downside of this company, right? Again, they misunderstood it. Perhaps, again, they didn't understand that, hey, there are people who try to make the company better and not just see the demise of it and just doesn't want to fix it. Instead, they would want to break it down in order to make more money the quick way, right? But yeah, so I could, again, string that along to 5 years ahead, right? And if we could trend this down right here, right? If we could trend this down, revenue keep going down 20% at a time, but income keep coming up 30% at a time, that is a good thing for not having the revenue down, right? So if you don't understand that concept, it's pretty hard to grasp here too. I'm not saying I'm a genius. I'm just saying that sometimes you just need some imagination the other way too. And this is actually a good thing. This number right here is a sure thing right there. Currently, if I have to pick and choose which one to pick, which company to pick, is this one right here, because they have a lower footprint, right? If this is two company and they're making the same thing, right? The profit margin of this company right here is actually a better profit margin. Any sane person would be picking this one because this one makes more money versus this one, right? Again, this is quarter four of last year, and this is quarter four of this year. So I don't know what people are up and on about. So the cash flow right here is $18 million. Now the reason why it comes up to be negative cash flow of $200 million is because it accounted for this quarter one and quarter two of last year. All right, now quarter one, quarter two of last year, we were decreasing in account payable. Excuse me. So right here, sorry. Last year, we did account payable of $500 million, $800 million account payable, and then we're down to now 304. So again, like we have downsizing, but if you compare that to, compare that quarter end, yeah, right here. So from last year to this year, let's look at the 500, minus this. See, that is the quote-unquote cash burn of the company. Okay, and then of course we have a favorite part right here. Moran's pointed out already. So the total debt, obviously we were able to kind of lower, quote unquote, the total debt of $50 million. Long-term debt, obviously we were able to swing from long-term debt. See this? Last year we were hold on. This is quarter end, so that's why it's kind of high like that. But now we're down to $17 million. Okay, so we are paying off debt right there. Now if you do a trailing 12, I'm sure you see a little bit of different thing here. So were they able to borrow this type thing? Cash flow? No. Okay. So that was the only long term right now we have as a debt is right here. Boom. $17 million. We could pay that off pretty quickly. Retained earnings, obviously we need to kind of lower this by that much in order to be able to pay dividend again. We weren't able to do that this quarter, but hey, you know, slow and steady win the race. Now net, we want to be more in that arena, but we are coming. So we were able to increase our book value by 10 cents per share today, or 10 cents per share. So that's a good. Anytime you see the increase in book value, that means there is an increase in shareholder equity. Now the next step, obviously, the first quarter just expected to kind of come down a little bit. Depends on what we're gonna do with the shareholder equity. Of course, it fluctuates. Anytime we have fourth quarter, it seems like there's a step down in shareholder equity. So yeah, we'll see how that pans out for the next first quarter that we have. I wonder what the Wall Street projection for the first quarter of GameStop, if they have any here. Let me double check. I know some of you probably falling asleep here. Okay, so the projection is that we are going to lose 9 cents a share. Now let's just say that they are right, and we're gonna miss, let's do 10 cents a share, right? We miss 1 cent. Again, I'm just projecting here. So let's say we miss 1 cent per share, or 10 cents per share. So that means they are projecting that we're gonna lose $30 million. Okay, so we are going to lose $30 million, meaning coming at a $30 million net loss for next quarter. So if that's the case, then the trailing 12 of next quarter is going to be hold on, I am trying to, oh shoot, I did not, sorry you guys, I did not show this part. I am tempted to re-record this actually. It's okay. I'm sure you could kind of take a look at for it yourself. So I'm looking for net positive here. The net income right there. And so if that was the case, that we're gonna lose $30 million, if Wall Street is right about GameStop, then we are going to come out at okay, hold on. So let's do the profitable quarter, this quarter, plus, okay, no, minus actually, because it's going to be a negative $33 million point, right? That's the projection. If Wall Street is right again, right? If, I'm talking about if. And then this one right here. So the next quarter earnings, if Wall Street is right, then we are going to show $26 million in the plus. Okay. Now, if we beat that, obviously, it's remained to be seen. So the reason why we're only showing $6 million this trailing 12 is because of this, right? So the last 9 months, they are actually making money, $56 million right now, right? $58 million right now that we are making money on the plus side. $58 million in 9 months so far. So that's good. I mean, it's a good favorable number. Regardless, we are going to show profit year on year, and of course the PE ratio is going to come down as we are annualizing on the gain for GameStop. I project, of course, we're not going to lose much money annually now. So earning per shares right now, of course, 2 cents per share. We are moving slowly to make this company better. As a retail, footprints very low and all that stuff. Okay. All right, guys. That's all I have for this day. I'm sorry if I'm kind of long-winded today. But, yeah. Hopefully you learned something. And not to be too optimistic or pessimistic or whatever. Just tame your expectations sometimes, right? And it's okay to stay in the middle. Lukewarm, right? The middle path is usually the best path to be. So that way you're not swayed by any extreme emotion here, right? Yes, you could lean towards the, pessimistic for a little bit, but always come to the center. Yes, you could lean to the excitement a little bit, but always stay in the middle, because you have a better point of view when you are in the middle, because, hey, you get to listen to both sides and decide when the facts support it, right? In my opinion, of course, I have my own life experience here. Not by much. Of course, I'm not that old. I'm not that young either. And so I've learned what I learned in the stock market, in the crypto market. And so I apply that kind of sentiment to anything that I've encountered right now. I don't understand why people, can't look at both sides and it's like, hey, actually, Ryan Cohen is trying to do the best here. Yes, Ryan Cohen is not a god. I get that. But at least he's trying to do the best thing. But if you cannot compare between who Adam Aaron is and who, between two leaders, and you see one leader is as better than any other one, then I don't know. To me, Ryan Cohen has done the right thing all the time, right, so far, right? Because he's not burning too much cash for the company, because he's treating it as his own cash here, right? Adam Aaron just destroy shareholder equity, just destroy any cash that he has on hand. What are they doing, I thought they had $2 billion at one point, and that was gone within 2 quarters, right? Buying Highcroft Mining, buying everything else except, to pay off debt, reduce liability, like Ryan Cohen has been doing for GameStop. And yet people still support AMC, the same narrative, bunch of BS narrative, right? When not looking into yourself, or look into it for yourself, and just blame other people. It's like, you told me this. I just listened to other people. Okay, if you resonate with those people, then listen to them. But please, learn to have your own opinion as well. And it's gonna, at least have your own conviction on things and look at facts and figures first before decide what to do. Right? All right. So that's all I have. I see you when I see you. Thank you. Bye.